Good evening, good morning, good day. I'm very happy to see you here today. Just yesterday, one of the fine gentlemen from Canada came here in Thailand, and I got to meet him and her beautiful wife. It was a very pleasant experience. He's a great traveler and a trader as well. I got to know more of him as a traveler than as a trader. We went to this temple together. It is near where I live, and I'm not a particularly religious person. This is a place that happens to be near my village in Thailand. He made a comment that this temple looks like a Hindu temple, and he is very right in saying so. But is it really a Hindu temple? There are some Buddha statues outside, quite a number of them on the left side as well as on the right side, that may give us a hint of it being a Buddha temple. But to be really sure, we needed to look inside the temple. What was inside? Was it some Hindu deity or was it Buddha? And it was indeed Buddha. Like in this temple, like in many cases in life, same as in trading, we need to look inside the market to know what is really there. Is it bullish, bearish, or neutral? On my Twitter page, Superior Profit, I tweeted this market breadth charts from Q Systems. Market breadth of Nasdaq and market breadth of NYSE, and I mentioned that I'll explain why I have started to short some instruments. I have a bearish view on QQQ, Nasdaq ETF, among other things. Let's look at some of the breadth signals. On Nasdaq, we had a large number of Hindenburg confirmations and also Bango, that is irrational exuberance cluster. Bango was created by Mr. Ian Woodward, may him rest in peace. More Hindenburgs, more Bango. Nasdaq had been flashing these warning signals for very long time. What about NYSE? NYSE also flashed the warning of Hindenburg, then confirmed Hindenburg, and then one after another Bango signals, irrational exuberance, but there were not another Hindenburg signal after this one until Thursday and then again on Friday. So now in both NYSE and NASDAQ we have a large number of confirmed Hindenburgs as well as Bangos. That is an internal reason to be cautious about long positions, and if you were me, probably you would start to do some short trades as well. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks for a living, actively in the USA and India markets. I use only one trading system that I created myself, Q. That system allows me to choose trades where I combine the technical analysis with my preferred trading direction in the market, and also I buy only in strong sector industry with strong fundamental stocks, and sometimes I try to align seasonality as well. On the bearish side, I like to short weak technicals with weak sector industry score with weak fundamentals. And today I'll show again with live examples why This analysis I call 360 degrees analysis. It can be top down, it can also be bottom up or a hybrid technique. That's why I don't call it top down only. It's a 360 degrees analysis looking at all the dimensions. I will explain today once again why that works better than working with only technical analysis. It works fine for me. I regularly share live stock and market analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public. You are most welcome to make use of them. These are the Q systems I use. They run on Metastock and the technical system runs on TradeStation as well. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. It can be risky, but it does not have to be risky. I use it all the time, but I use it when it is more appropriate to use options than to use stocks. I will share some of those trades in today's session as well. Let's continue with the live systems. Let's look at the market internals in more detail, starting with the market breadth total view. We already saw Nasdaq and NYC breadth, and now it is more broad total view breadth. We can see we have large number, in fact too many Hindenburgs and also Mango signals. In one of the recent webinars, I made a statement that from past experience, I don't think this cluster of Hindenburgs are going to end well in terms of a bullish move in the market. We'll see if that comes true or not. That is just a thought I have. That is not a trade setup. I use trade setups to enter trades, but however, based on my past experience, it is more likely to have a pullback from here or not. When the pullback will happen, we don't know, but we will know when the pullback starts. And in the last market recaps, again, I mentioned that we need to have some of the trend line supports broken, at least somewhere, where in one of the market ETFs or futures or indexes or this breadth total view or the mega cap index, somewhere the trend line support needs to be broken so that we can start to drill down into that pocket of the market and start to short. Did anyone break this week? We'll soon figure out. If anything has broken this week, that will be an area to look to short. Let's look at some of the other signals on this chart. 3-month new high low that has now just crossed over to the bearish territory. The yellow line, percentage of stocks above 50-day moving average, that was and is showing a bearish divergence because from this overbought region it has steadily come down, continuing to go down this week also while price was going up. So this bearish divergence is going to resolve more likely in favor of a down move. There are also bearish divergences in advanced decline and up down volume. I am using the daily chart here. If you change to weekly, you would see that the divergences are present very much in the weekly interval as well, bearish divergences. That is another reason I think market is more likely to pull back than not. Remember, the internals will confirm us what is really going on, not necessarily the external. Same like in the temple picture. What kind of stocks are in favor? Small cap versus large cap. Overall, it is coming down. If you see the whole week of this week, it is coming down overall. So small cap is not in favor. Growth versus value. Overall, for several weeks, growth is coming down. So growth is not in favor. Small cap growth, therefore, together is not in favor. Not a sweet spot for Can Slim like traders. Let's look at the total view using weekly daily. It is always great to look back and see how the analysis is playing out. In the last market recap and probably before that also, I showed how the weekly trend line support is holding extremely well in this total view custom index of all indexes. And I made a comment in the last market recap, because it is holding so many times in the longer term weekly interval, when it will break, that will also be significant. We also see some interesting pattern. In my jargon, trading jargon, interesting is something that I can use to make profitable trading decisions. What is that interesting pattern? We have a bearish headwind, then the very next candle we have bearish indecision at the top and bearish backdrop color. Yes, it is weekly interval, but in daily interval terms, it will be seen as a bearish headwind, then a bearish momentum or flow signal. Now, in daily interval, that is a point to short. In weekly, there is no trade setup like that. But the fact that now we have a bearish headwind, immediately following that, we have a bearish backdrop, that also points to a possible down move going forward. However, very importantly, all these Q signals are to be used together. The concepts are additive. We don't just pick up one concept and apply that. And the concept that I mentioned in the last market recaps, several of them, is that the trend line supports have to be broken before I can be bearish on a pocket of the market. And this is overall market breadth total view. There the trend line support is still holding. It may break next week, but until that breakdown happens, I'm not going to consider shorting, not while looking at this total view custom index. One interesting thing you may see, that after a very long time, usually I just look at the screen length, that is long enough a period to make some decisions. And let me spend some time on this chart. You will see this chart this Q charts at a glance has a lot of signals, and in every market recap I cannot cover everything how I am reading them. The more you use, the more you gather insights, and then finally you apply the trade setups. So let's gather some insights. In the entire screen length, this is the first time we have a pattern in the activity bar that is called a stair step. That is volume going up, and volume is heavy volume for all the bars. That is 2 bars in this case, in fact 3 bars. But the first bar didn't have high enough volume, not a thick bar. That was this one. That was a down bar. Next bar, Thursday, down bar again with high volume, and then Friday, down bar again with very high volume. That is a stair step pattern, all down moves. In the entire screen length, that has not happened before. In the weekly, we have now 2 successive weeks, not only down, but heavy volume down weeks. In the screen length, that has not happened before. Yes, we had down weeks earlier, but not 2 down weeks consecutively with so high volume. All these signals are adding up one after another to say that it is likely that it will come down. Now let's look at a pattern. near jump thrust high, not at jump thrust high because the color is not cyan, but nearing that jump thrust high at price extreme high here. Then came a big move down 3, that was here. After that, price has gone up. Now this is not a stock, but if it was a stock and fundamentally weak stock, my experience is that this pattern would lead to a down move to at least catch up with the low of this big move down 3 candle. If it was a weak fundamental stock, it is not, it is the overall market breadth, but still let us calculate the low of this candle to current price. How much down move is that one? Easy to do that using Q Global on MetaStock. That's a down move of just 3.7%, 3.75 to be precise. So just 3.75% down move will bring us to a fulfillment of the pattern that has worked very well before. I think that is more likely to happen than not. Again, that is not a trade setup, but these are insights that are adding up one after another. Let's close this chart. Let's look at the mega caps now. That is another way of looking at the market. Mega caps have tremendous impact on the market as a whole and more on some pockets of the market than others. Specifically, it has a huge impact on QQQ. I mentioned I have actually a bearish view on QQQ. The same analysis once again in the weekly chart. In the mega cap index, I see the pattern that we saw in the market total view. A bearish headwind, immediately after that a candle with bearish backdrop and a bearish indecision at the top. Unlike the total view, here the trend line support is far away in weekly. It is going to drop without finding any support for a long time. However, in the daily on Friday, it just stopped short of breaking the trend line support. If it broke the trend line support, then we would have one of those breakdowns that would lead us to start looking for shorts, but it did not. It barely held the support. We'll see if it can break down next week, and mega caps have a tremendous impact on the market, more so on some pockets than others. If it breaks down below this trend line support, that will certainly lead to a bearish pressure on the market. What about the leaders? This is a concept that I learned from Dr. Jeffrey's videos. Create an index of the leaders of the market. Who are the leaders? The best performers. So I looked at all the sectors using QEdge. It is easy to look at the sectors, find the sector leaders. I did that and I looked at less speculative stocks. I don't want to look at $2 stock that ends up being a sector leader. Not like that. I looked at more large cap stocks than small caps or mega caps maybe, who are sector leaders, and I created an index of that. The concept is that if the leaders start to break, not individually but as an index, that is a possible signal that the uptrend is over for now. This is the leader index. In the weekly, instantly I see a pattern that is not very friendly. That is an indecision cluster. One of them is important, but a cluster is much more important. Here 1 plus 1 is much more than 2. In the daily, it actually broke the trend line support. However, the candle has an upper tail as well as a lower tail, so I'll need to see if it can break below Friday's low to conclusively decide that it is breaking below the trend line support. Once again, once some of these supports are breaking, I am ready to look for shorts. Once again, the indecision cluster in weekly and the fact that it has actually technically broken the trend line support is pointing to more move downward. However, again here I will repeat, no harm repeating. Repetition is good in trading. If the lower tail was not there, this would be a confirmed breakout for me. Let's look at the pattern earlier. Not near but at jump thrust high, at price extreme high came a big move down 3. Yes, price went up from there. But let's calculate once again what is that move if price had to come and close at or below this candle where we had big move down 3 with this pattern. What is that percentage? Easy to find out here. 14%. Interesting. And anything interesting in my jargon is something that I can use to trade profitably. In terms of market breadth total view, we saw this percentage was much smaller. When I look at the leaders, then I see this percentage is much more, 14.5, let's say about 15%. What does it say in terms of trading? That says that it says that what I do, what I always explain, that I don't like to trade the market ETFs. I like to find individual stocks to trade because they are not average of 30, 500 or 100 stocks or 2000 for IWM. They're individual stocks. They will move a lot more. One's move will not negate another's move. I can use that information for my profit. So these leaders that were going up, if they start to come down, stocks that go up like rockets eventually comes down like rocks. So I will like to short them. The pattern here is also pointing to a bearish move rather than bullish move. And once again, if I look at the entire screen length, Friday's candle had the biggest down volume for the entire screen length. That is not bullish. So far, I looked at different market breadth signals from Total View, NYSE, NASDAQ, Mega Cap Index, Leader Index, all are pointing to a 5%, let's say about 5% to 15% move, depending on which instrument we are talking about. But we have not seen the breakdown yet in any of the major indexes. Let's see the any of the market breadth indexes. But let's look at the market ETFs now, starting with SPY. The patterns repeat, and when they repeat, they become more significant. In the weekly, instantly we see once again a bearish headwind, immediately followed by a bearish backdrop and an indecision cluster. What do we see in daily? A bearish headwind, immediately following that a bearish flow. If this candle was a bearish shape candle, that is, it didn't have a lower tail, that would be a short signal, because a bearish headwind, if that does not give a short setup, in this case it didn't because we had a trend line support. If the bearish headwind is followed by immediately or after some candles a bearish flow candle, that is a short signal, provided we have a bearish shape candle, but we didn't. Technically, I think it just broke the trend line support, but it has a long lower tail. So I'll need to see if it can go below Friday's low to confirm the breakdown. Remember, I'm waiting for some breakdown to happen to start to short stocks. And let me elaborate a little bit. I think we all are very much aware of CanSlim methodology. We may or may not use it now, or we may use it in one form or another. I do use it in one form or another, and it has extremely valuable concepts. CanSlim tells that at the market low, let's say after a bearish market, when the market starts to move up, there will be one follow through day, which is Eureka day for HGSI. However, it also says before the market starts to go up, the leaders will start to break out first. So, experienced CanSlim traders don't always wait for a follow through day. They sometimes buy the stocks, high growth stocks, that are breaking out before the market is starting to move. The same concept is applicable at the market top as well. Yes, the market breadth total view did not break down. The megacap index did not break down. SPY did not break down. However, there will be stocks that are breaking down before this market level instruments, and those you could short already, and I did short some of them. I have booked profit in some of them, but it is also good to know how the market is moving, and market is saying so far that it is about to break many supports. Let's continue with DIA. DIA is weaker than the overall market. We can see that easily from the relative performance tilting down quite sharply. We see that from the bearish indecision cluster in weekly, and the fact that it has already two bearish backdrop candles, not one like in the other instruments we saw. In daily, it is moving sideways for a while. One trend line support is actually broken, but we need the next one to be broken to start to take short trades in Dow Jones Industrial constituents. There is no nearby support trend line. The yellow direction line is uptrending, that can act as a support, but this distance is more than enough to take a profitable short swing trade. Let's look at the screen length. During the screen length in the daily chart, this is the first time we have two successive days of high bearish down day, high bearish volume down day. In the entire screen length, that did not come earlier. We had jump thrust high here, price extreme high, then came a big move down 3, price went up. What is that distance? Let's find out. Just 2%. Just 2%. So Dow Jones Industrials ETF DIA has to come down just 2%. I don't know if you could read that, but that's fine. It's less than 2% actually. It has to come down just about 2% or so to fulfill the effectiveness of this pattern. However, again, for trading purposes, I use this pattern for strong fundamental stocks at the low end, weak fundamental stocks at the high end. This is not a stock, but I'm trying to calculate what is the down move percentage I may expect. So far, I am seeing, let's say 3 to 15%, depending on whether it is an ETF, market index, or it is high growth stocks that go up sharply, come down sharply. Let's look at small cap IWM. Here the breakdown has already happened in weekly. Remember, in the last market recap also I mentioned I was waiting for some of these breakdowns. Let's look at the historical chart, which has the trend lines that are broken daily interval. The daily trend line support was also broken this week. So both daily and weekly trend line supports are broken already in IWM. Remember, in the market breadth analysis, we saw small caps are underperforming, and we see here that both weekly and daily trend lines are conclusively broken in IWM. That is a time to start to look for shorting opportunities in small caps. That is why I already started shorting some stocks. And lastly, let's look at QQQ. I specifically mentioned I had a bearish view on QQQ. See the pattern playing out again. Bearish headwind in weekly. However, here the bearish headwind was already accompanied by bearish backdrop and a bear release signal. And this week it is continuing with the bearish backdrop, and we have an indecision signal as well. That is bearish. This instrument QQQ is closing right near the low of the weekly candle. And I will make a statement. It is more likely to come down from here than not, because the daily trend line support is also broken. Remember, once again, I was waiting for some of the supports to be broken. QQQ, which is highly influenced by mega caps, of course, the mega cap custom index is yet to conclusively break. So when I am saying that it is more likely to come down, that is with a caveat that next week, if the mega cap custom index decisively breaks trend line support, it is very likely that QQQ will come down to the next trend line support. What is that distance? Let's find out. Not much. Okay. Actually, on Metastock, it is much easier to calculate the percentage. Let's do that. I love the simplicity of Metastock. From close of Friday to the trend line support, it's about just 2%, 2.2 to 2 point something. So the market may easily come down somewhere between, let's say, 3% to 15%, depending on which instrument we are looking at. And if I am a trader, and I am, I would rather like to trade the instruments that move more. Therefore, I would like to short high growth stocks than other stocks. Now, I mentioned in the beginning of this session that I will explain with live example how and why I follow this 360 degrees technique. In the last market recap, if you remember, I looked at these three stocks. I found them using top down and also bottom up analysis. However, my Q Vital was not working because Refinitiv was not responding. So technically, I found three stocks to short last week itself. All had confirmed technical setups. However, I don't short unless I have looked at the other dimensions. I could not, but let's look at them now. STLA. In the last market recap, I showed that if I look at the historical chart, we were here, right here on this candle. I showed that it had a breakdown short setup at a very high price level. However, I could not look at its fundamentals. Let's look at that now. And I will highlight few pointers on how to choose stocks to short. Stellantis STLA had a breakdown short setup last Friday, but I couldn't look at the fundamentals. Let's try to look at its fundamentals now. Refinitiv has maintenance during the weekends often. Not only this weekend, many times. So from past week's experience, I got smarter. As you could see, it was not responding, and I got smarter from last week's experience. So I snapped the vital scorecard of Stellantis already. Stellantis, look at the colors. Everything is bullish color. I would not short a stock like that. Great valuation, great earnings quality, funds are accumulating, and yes, today, that is Friday, 89% of stocks are up, but I checked, the industry is strong throughout. And this is one thing I wanted to point out. Where is it in the price range? Percentage below 52-week high. 0. It is at 52-week high. If I look at the stocks chart, I'll come back to the fundamental scorecard, but let's look at the stocks chart 1 second. Stellantis at 52-week high, at price extreme high, at jump thrust high. That is enough reason to look for a short, but the fundamentals doesn't allow me to short a stock like that. There are weak fundamental stocks at jump thrust high, price extreme high. I would rather short those than a stock that is so strong as Stellantis in Q scorecard. And I'd like to point out one thing. At 52-week high, at price extreme high, at jump thrust high, it still has a dividend yield of 5.8%. I'm not going to short a stock like that. There are many traders who buy stocks for the dividend, and at so high price level, if dividend yield is 5.8%, even if it comes down, dividend yield will only keep on going up. There are many people who may buy the stock for the dividend. If it starts to go up, it will find a lot of support. I am not going to short a stock that gives 5.8% dividend yield at 52-week high, price extreme high, jump thrust high. That is the power of the 360 degrees analysis. This is not a stock to be shorted using Q techniques. I looked at two other technical setups. One was AMAT, one was MCHP. Let's see, for them I can generate the scorecard or not. AMAT. I didn't save their scorecard in the single page fashion, but as I said, I got smarter from last week's debacle. How so? I saved the entire liquid stock scorecard. So let's look at AMAT. AMAT is not so strong as Stellantis. Instantly we see that yes, it is not a one-page view, but we can still read it. Valuation is not undervalued. Stellantis was undervalued. Dividend yield just 0.8%, not so high like Stellantis. And earnings growth is very feeble. Nowhere close to 25%. Very low earnings growth in the last quarter. Last year earnings growth is also very low. It's much weaker in terms of fundamentals, whichever way you look at it. If you look at revenue growth, it is actually negative in the last quarter. This is a stock I'd like to short at the top. So we already had a technical short setup, and if you could check the Q scorecard, you would know the scorecard would allow shorting. And I did a top-down analysis to find AMAT. That is, I found AMAT last week. You may rewatch the video if you don't remember. It was already in a weak industry. So it had a 360 degrees short setup. Let's look at AMAT, what happened after that. Applied Materials. I found the short setup right on this day. And if you remember, I mentioned that if I found it on Friday, I would have shorted it. What was the preferred trading instrument? That view was also unambiguous. Short call vertical. That is in a nice profit by now. So AMAT 360-degree setup was profitable. Stellantis was not a 360-degree setup. We wouldn't short. The other stock that had a confirmed short setup was Microchip MCHP. Again, I could not see the fundamental or show the fundamental scorecard last market recap. Let's see that now. Instantly, we can see not undervalued. Earnings growth is actually high negative, even worse than Applied Materials. No large dividend yield. Even more reason to short in terms of fundamentals. Technically, it had a short setup. I found it using top-down analysis. So it was a confirmed 360 degrees short. We were right at this point, and remember I mentioned this distance was a bit higher than I would like, but again we could adjust the number of shares to trade if we were trading shares to take a bearish trade. We could adjust the number of shares, lower the number of shares to have the same dollar amount risk. But what was my preferred instrument in this case also? I was unambiguous about that. Short call vertical. And because I would have taken short call vertical as I stated, time decay would be in our favor. Price move also would be in our favor. We would be in a small profit by now. Looking at the weekly pattern, it is much more likely to come down than not. So this I think once again illustrates the value of using 360 degrees analysis. I know some traders only use technicals, but it is very clear to me from all the examples I share, from all the trades I take, if we buy only fundamentally strong stocks at technical buy point, our probability of success and amount of profit will be larger over a period of time. And if we short only weak fundamental stocks with technical short setup, our profit over time will be more than just using technical setup. And of course, I will always align the industry with my trades direction. So two confirmed setups made a profit in this market, and they were not bullish trades, they were bearish trades, and that is what I mentioned. I don't need to wait for some market instrument to break down before taking short trades. I in fact also has a bearish position on QQQ. In fact, in let me share. I have three positions on QQQ or equivalent instrument. Three ways shorting QQQ. One is I have a long put vertical, which is already in a profit. I used the intraday chart to take the short trade when it was breaking down daily trend line support. I took a long put vertical. I did not take a short call vertical. Why? Because I'm expecting it to come down. Already it has broken the trend line support. So I used a short, not short, I used a long put vertical with the long leg slightly out of the money when I took the trade. So let me again draw. Let's say I was taking the trade when it was breaking below the trend line support. I used intraday chart, fine tune chart to actually take the trade, but when it was breaking the trend line support in daily, then I could use a strike for long leg that is somewhere here, and the short leg would be, usually I would use the support for the short leg because my long leg is slightly out of the money When that comes in the money, my profit will be much higher. And if you structure a long put vertical in this way, the reward risk ratio is not 1:1. It is much more than 1:1. It could be 2:1, sometimes 3:1, sometimes even 4:1. That is why I took a long put vertical rather than short call vertical. It is not possible really to have a short call vertical as a bearish trade with that high reward risk ratio. But long put vertical will allow us to do that, and that is why I used a long put vertical. It is already in a profit. In fact, I also took some day trades. Let's go to the intraday chart. That is a day trade. I have already closed it. In the morning session, I use 5-minute chart. There is another chart I use to actually enter the trade. Firstly, you may notice that right at the open, I am going to go back and forth between this intraday 5-minute chart and the daily chart. See, when the price opened here, I'm going to go back to the daily chart. The opening price was actually below the trend line support. So at the open, the trend line support in daily was broken. But as you know, if you are trading for long enough, some of you, or probably all of you, are trading for many more years than I am, not all, but quite a few of you, you would know QQQ or NQ, the futures equivalent, is very volatile. It jumps around a lot more than SPY, for example. But I have a tool now where I can see how likely it is to go up after an open below trend lines. How likely? That is using the market percentage chart, which also has a real-time change of mega caps. Mega caps have a huge impact on QQQ. So I could look at them together at home at this intraday fine-tune chart on QQQ, and on another monitor I had this market percentage chart with mega cap. So it broke below trend line support, came down, then went up, stopped right near early range high, came down with a bear release signal, very bearish shaped candle, and the mega caps were starting to go down. I shorted right here. That was a day trade. So what I used weekly naked put option. I bought weekly naked put. As it went down, I had a large enough profit. I closed the entire trade. I did not wait the whole day out. If you are trading weekly options for day trading, by the way, I don't suggest day trading to anyone who has not made a profit swing trading or longer term investing for some time. Day trading is, of course, more fast. It's better to practice with slower instruments first, not smaller, slower instruments first, that is swing trading or longer term investing. If you are able to make profit from that, then it is perfectly okay in my view to start some day trading if you would like that. So I sometimes do that. I'm not a day trader, but because market was at a very high price level, mega caps were wobbling. What does it mean wobbling? Meaning they were not going up as they were going up before. And I made a Twitter post a few days ago saying, I used this word hype about artificial intelligence related stocks. Is AI real? Yes. Is there a hype? I think so. So because that AI hype led to a huge rally in some of the mega caps, I was expecting that to subside. That's what I mean by wobbling. And that would be enough for QQQ to come down from so high price level. So I was willing to take some day trades on QQQ at the right moment using the fine tune chart, and very importantly using the market percentage chart that increases the probability of success manyfold. So I did that. I closed this day trade that was using weekly naked put options. That is not all. I have taken two more short positions in QQQ or QQQ equivalent, and I'm holding those. Those are not day trades, but those are not long-term investments because those are using SQQQ. That is not an instrument for long-term holding. That is an instrument for swing trading, probably for a fast profit. All these trades I entered using fine-tune chart, but I was looking at the weekly, daily all the time. What do I see? In weekly, SQQ had a bearish, sorry, not bearish, what am I saying? At the low, I would like a bullish headwind to come. That came. The color turned bullish and it remained bearish all the time until this week when it broke above the trend line resistance. So weekly is telling it's okay to buy SQQQ. In daily, we have a trend line breakout. Yes, another trend line resistance is nearby. I am aware of that. I'll keep an eye on that. But right when it went above trend line resistance at the open, that was the same time, of course, when QQQ went below trend line support at the open, I bought some SQQQ. But I said two, right? I have two more bearish positions on QQQ. That is one using long SQQQ, the other one is using short put, naked short put on SQQQ. For the naked put, I used 12 strike and I used about, I don't remember, somewhere between 30 to 45 days to expiry. So I have a long put vertical on QQQ. I have a long, if you say stock, long stock position on SQQQ, and I have a short naked put on SQQ using 12 strikes and I think 30 to 45 days, somewhere in between there to expiry. So I have a large number of positions on SQQ. And while I shared some AMAT and MCHP short trades last week, I was also looking at AMD. This I shorted some time ago and I already made a profit. I actually closed it on Thursday, very well timed. AMD, I had a long put vertical. I closed the trade on Thursday because I saw this long lower tail and I had a significant profit already for a long put vertical. So I closed that trade. Now another trade I closed this week. This is a good discussion because trading is not only about finding trades, aligning them with different dimensions, not only about looking at market breadth to see the true health of the market, but it is also very much about managing the trade and actually closing the trade to book a profit. I don't discuss those closers all the time, but now is good time to discuss some of them. The other trade I closed is MO. Remember when the market was at a very high level, I mentioned I was going to buy defensive stocks. Altria MO was one of them, very high dividend yield at that time, about 9%. If you look at the weekly, I bought it somewhere here in a congestion area at 9% dividend yield. And upfront, I told the trend line support was already there. In weekly, I don't know the trend line support in daily was there. It must have been there because the weekly support was there and the watermark support was also there in daily. And I mentioned upfront when I bought it that even if the support breaks, the watermark support broke, I was not going to stop out because I was going to hold it anyway because it was having very high dividend yield. That worked very well. It gave a very nice weak hand taking out false downside breakout. Last week in the market recap, I mentioned it is acting very well. It indeed acted very well, shoot up sharply. Thursday had a very big bullish move. I have a lot of signals here. I saw that it was overbought already for many days. on Friday I watched using fine-tuned chart. I closed out right at this point. Good for me. It closed down more after that. It's not bearish by any means, but I had a big enough profit from this trade. About, okay, big enough. What does it really mean? About 6% profit, which is okay for me for swing trading stocks for a couple of weeks. So I can now rotate the money in other instruments like in bearish trades of SQQQ, for example. Those are few trades I closed. Those are few trades aim at MCHP, how they worked out. Now let's look at few other dimensions of the market that is very useful to decide that is shorting the right thing to do. If you notice this picture last week, I made a comment that if you observe, not this picture, the similar picture that I shared last week, I made a comment that the bullishness was reducing. That would be a correct observation. And this week we see, if we look at the weekly period, 5-day period is clearly bearish. Longer term 1-month period is now bearish. 10-day period is now bearish. I'm just looking at red colors versus green colors. If reds are more prevalent overall than green, it's bearish. Simple. So longer term bearish, medium term bearish. Today is also bearish. Only Friday it turned up. What will I like it to do? I will like it to come down next week. That will be a downtrend. Let me redraw it. That will be a downtrend, a pull up, which is this last Friday's pull up being green. Then next week, if it comes down, it will resume the downtrend. I'll be very happy to see that. That will align with all the other signals I am seeing in market breadth charts. That will be right at this point. You can imagine if it is like a candle chart, it is in downtrend already because longer term, medium term are bearish. Even 2 days is bearish, just a move up. Now if it comes down, I'll be able to short the swing high, so as to say. Now if you look at the bucket analysis, perfectly balanced. Exactly 50% of stocks are above mid Bollinger Band, exactly 50% below. And where is this happening? This is happening when several market ETFs like SPY, QQQ, SPTM, DIA are near all-time high. They are just about to break trend line support. If you think of it in terms of a candle chart, this is like an indecision at the top candle. I would think that it is more likely to come down from here, from this indecision of the top, than to go up. And of course, I am having benefit of looking at many of the other signals. Now, recently, I shared a tweet about the India market. The technical analysis using Q systems works in all markets. I don't know if I can find it. Yes. Well, Twitter can also be slow during weekends, as you can see. X now. Very funny. Okay. This is an useful equivalent comparison. This is about another market, India market, Nifty 50 index, that was also at all-time high using backdrop weekly chart. In these candles, I showed it just broke below trend line support at that time, just that week. In daily, I showed Nifty 50, the major index there, just broke the trend line support on that day, precisely on that day. Which day? 13th March. This week actually. Just broke trend line support in weekly daily on 13th March. That is about the major index, but look at what happened to the breadth. Just one day breakdown below trendline support, one bar breakdown below weekly support, what can happen to the broad market? What can happen to the bucket analysis? That is why I mention I don't like to chase. And I mentioned be cautious about the USA market too. These patterns work in all markets in a similar way. USA market has not become so red yet, but I'll not be surprised if it does so in the coming weeks. Why so? Because of the market breadth signals, including Hindenburg's, because of the Pangos, and because of the breakdowns I am seeing now, because of the hype in the AI stocks that are coming to an end. What do I mean? Let's look at the stock NVIDIA. NVDA. NVIDIA. This was the most hyped stock, and for a good reason. It was a very strong stock, is a very strong stock. Am I going to short this stock? No. I showed in one of the market recaps. It's a box one stock. There are many weak stocks in semiconductor industry, like I just showed, also showed in the last market recap, Applied Materials, Microchip. I would rather short those stocks than short a box one stock. Not right now. But what is Nvidia showing? Is it a bullish pattern at jump thrust high in weekly, at price extreme high in weekly with a big move down here? It is not a bullish pattern. It's not a stock to buy now, but many people bought in the hype for a good reason. It's a very strong stock, but I think it is not a stock to buy now. And if the strongest stock in the industry is not a stock to buy now, I would rather short other stocks. And AMD, I explained just now, is also related to AI. I shorted and I made a profit in that. We still have to look at one more dimension, that is the technical breadth, that is still continuing with the internal health check of the market. Friday's picture is slightly more bullish than bearish. That is in sync with sector industry stock breadth that was also more bullish than bearish. This could be once again a slight move up in a downtrend. What I would like to have is a bearish picture here next week, maybe Monday, maybe Tuesday, then I'll again be able to short the swing high. I like to short with some tailwind. The tailwind comes from the longer term interval, weekly, technical breadth weekly. There is no scope for ambiguity. It's bearish across all categories. Plus we have a very clear alert from the unique reversal signal headwind. So all these are pointing to a down move. Friday's pull up in the down move. All I am waiting for is a till down now. I'll be able to short the swing high in a downtrend, and if that is aligned with the breakdowns in multiple market pockets, mega cap index, etc., that will be the sweet time, most lucrative time to short because market had rallied a lot. Those are stocks, those are reasons to short. There could be stocks to buy also, and this is not a buy setup. Let me show this stock to you. I have the scorecard, MOS, undervalued stock, earnings growth not great, but that's fine. Has a dividend yield of 2.6%, not large enough to buy for dividend growth. No reason to buy based on earnings growth, unless you notice that the earnings growth is negative but improving. the single page shows that in a graphical form. I like the single page scorecard, but in absence of that, we can read it from the line that yes, it is negative, but the earnings growth is considerably improving. That is a reason to look to buy if the price is at a low point, and there is a clear reason to buy because it is undervalued. If I look at the stocks industry scorecard, very nice. Instantly we see, though market level I am thinking of shorting more than buying, this stocks industry is among top 20% of all industries, fertilizers and agricultural chemicals, and it went up quite nicely on Friday. So the industry tells I can buy, fundamental scorecard tells I can buy, and the stock technical charts using Q says just wait a bit. Incidentally, the bullish headwind here caught the very low. Then we had a big move up 3 at price extreme low here with a huge gap up. Since then it is moving sideways. It is not uncommon. Often if you are studying these Q charts, you would notice after big move up 3 at a low price point, it moves sideways for a while. Sometimes it may even come down, test the previous low, take out the weak hands, and then move up again. So if you have seen a big move up 3 at price extreme low, preferably at jump thrust low, not in this case but preferably, then even if it comes down, the moment it starts to go up with proper Q trade setup, you are able to buy with much more confidence. Here it didn't go down, it is moving inside a triangle. So if it can break out of the triangle, it will give a low risk buy point. Now I wanted to show that in any market, probably it is possible to find some buy setups if you are applying this 360 degrees analysis, and I don't have time, but there are high dividend yield stocks. Sorry about that, John. My system for some reason is showing the sound is working. It is not muted, but technology is like that. Let me continue. I am already near 1 hour point. What I am saying that there are actually very high dividend yield stocks at a low risk buy point. Even if they come down, we may just hold them for dividend yield. Just like I made a profitable trade in EMO, those could be lucrative buying opportunities in a market that is overall at a very high price level, but those stocks are not, just like EMO. So you may find buying opportunities there also. I'm at 1 hour point. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend, and as this live examples show week after week, as I always say, there is no reason not to do that. Trade profitably. Thank you.